To combat carbon emissions and curb air pollution in Delhi, the Arvind Kejriwal government has announced full transition of all commercial vehicles operating within the city to electric power by 2030. The new EV policy of the government proposes a phased addition of electric vehicles among cab aggregators, with 5% within 6 months, 50% within 3 years, and 100% transition by 2030. However, it can potentially disrupt the market for compressed natural gas. Most commercial vehicles in the city, like auto rickshaws, cabs, and delivery services, are CNG operated. And the city's largest CNG provider, Indraprastha Gas Limited or IGL, may face the brunt. As soon as the new EV policy was announced, the shares of IGL tanked nearly 12% to 403 rupees, its lowest in the current year. As on November 8th, the share price was at 395 rupees. Brokerage firm Jefferies downgraded IGL's volume growth estimated to 3% for FY24 and 6% each for FY25 and FY26. In Q2 FY24, the gas company reported a 28.5% year-on-year increase in profit to 534.8 crore rupees. However, the company's profitability may come under pressure going forward. IGL's sales are predominantly driven by CNG, contributing to approximately 75% of its total sales volume. Rest is piped natural gas or PNG. As per reports, 15% of IGL CNG sales come from cab aggregators, while private cars and auto rickshaws represent 40% and 6% respectively. Buses contribute 20% and the remaining comes from taxis and light commercial vehicles. Delhi makes up for 60 to 65% of IGL CNG sales, and Gautam Budh Nagar and Ghaziabad contribute 20 to 23%. So, what does the new EV policy mean for Indraprastha Gas Limited?
In my viewpoint, I think this is going to come as a dampener as far as I think the business outlook for IGL is concerned. Though it may not happen in one quarter, but in every progressive quarter, you are likely to see the stagnancy in the business of IGL from the CNG business. The quantum growth, which otherwise I think would be expected out of this situation, is not there. As such, if you look at, I think the volume growth that this company has been producing, it is in a single digit. So from a very clear perspective that if the 3,000 buses are going off the road in next 2 years' time, that means I think that amount of volume is not going to increase for CNG. On the contrary, it will come down. Even if the neighboring states adding their vehicles and converting them to CNG, at the best, I think that volume will remain in single-digit growth level. I think beyond that, I don't expect, I think, things to turn around big time.
Analysts believe that to mitigate the impact of reduced CNG sales, the distribution company may need to diversify its business by exploring opportunities in the EV charging infrastructure segment. However, it's not all doom and gloom for IGL. In a recent interview, Managing Director Kamal Kishore Jatiwal said that the company is ready to combat any volume impact caused by the new EV policy. He mentioned that the company is in talks with various state transport units for converting the state buses to CNG.
They have to look beyond Delhi. They have to expand their geographical reach. Leaving aside the demand projections in Delhi, their margins have been robust. IGL has now been reaching out to public state transports of Uttarakhand, Rajasthan, Uttar Pradesh and Haryana for conversion of their buses to CNG. Management has said that Delhi draft EV policy will impact around 15% of its current volumes, so I think it's discounted to that extent.
The Delhi's government's ambitious EV policy presents challenges for traditional energy providers like IGL. Nevertheless, analysts believe that given the substantial number of vehicles still reliant on CNG and the scope of converting heavy diesel or petrol-run vehicles to CNG, IGL can mitigate the pressures posed by the electric vehicle market.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's making plans for an early retirement. Business Standard.